This is Matt Russell from the FX Power Course, and welcome to the DailyFX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. Let's go ahead and pull up the charts. The first chart is the Euro Pound, and as I mentioned during last week, I was waiting for the previous support line to act as resistance moving forward, and prices did test the line from the opposite side on this candle right here, and now prices are kind of going sideways here. We have two minor reversal patterns here, two borderline dojis in a row. So if you did enter this trade short on this upper resistance line here, I would think about exiting this trade now at a profit, only because of these favorable bullish candlestick patterns that have formed on the pair. If you are flat right now, there would be no position. I would just wait again for prices to hit the previous support line, which should now act as resistance once again. The next chart is the Aussie Kiwi, and not much has changed here. Again, this was the bounce off that 38.2 fib level a few reports back that I mentioned, and if we move forward now, prices are near that 124 figure. Again, I would look to take profits anywhere near that 124 figure. Prices got there during yesterday's Sunday's candle, so maybe look to exit at least a portion of the position near that 124 figure. But again, because this is a fib trade or a Fibonacci retracement trade, the logic is that prices will once again hit that 100% line, which is near the 129.50 area. So that could be the ultimate target if you did enter near that 38.2 fib level. The next chart is the Pound Swiss, and not much has occurred here either. We do have prices, as I was mentioning during the last several reports, the borderline head and shoulder pattern. Prices did come up and approach that 170 figure. I was mentioning how we might enter a short trade near the 170 figure with a stop maybe in the 170.70 to 170.90 area, and prices did briefly touch that area, giving you a good entry level. So hopefully you were able to get in on that trade near, again, with prices near that 170 area, and again placing the stop near the 170.70 area, 170.90 area. If you're in this trade now, I would continue to hold the trade and look to take profits at the longer term support line formed by just connecting the lows on the daily chart. The next chart is the Euro Swiss, and not much has changed here. We do have this bull flag pattern. Let me zoom out a little bit here to show you what I'm looking at in its entirety. We have this longer term resistance line that I'm waiting for prices to come and test one more time, and then in the short term we did have this bull flag pattern forming. Prices did break out to the upside of that bull flag pattern, but now they're coming back down, testing the previous resistance line from the opposite direction. So this area I would expect to act as support, and that might push the pair back up near the 154 figure, which is where that longer term resistance line is. So that's something we can look for moving forward. Look to get an entry maybe near the 151 figure, anywhere near again the top side of this resistance line of the bull flag. And again, prices might break out and test the upper resistance line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.